All right, guys. As always, we'll get started with a little big picture, kind of broad market breakdown. We'll go over some top ideas. I also included this week some of Shake's top ideas from the shakedown. And then, of course, if you guys have any individual stocks you'd like to go over, just post them in this little chat on the Zoom call, and then we'll go over them next. So getting started, again, with the strongest sectors right now, clearly it's energy, but we've kind of gone over this where it's a little bit extended here. This is kind of more of a profit-taking area than looking to kind of initiate positions given the massive run it's been on for the last few months. Utilities, not surprisingly, also very strong. And when the market's very weak and we're very fearful, they tend to gravitate towards the safest sector. You're going to still turn the lights on every night. You're going to still pay your utility bills. So not too much of a shocker there. Perfectly retested that high. Going into some of the weaker broad markets, if we look at like weeklies on the mid cap, small cap, and the S&P, all kind of the same thing, just kind of inching over into support, where we have to pretty much expect a shakeout down through this level as the topping stage of these broad markets would be breaking down into more of a breakdown stage. So we can set in the mid caps under 450, probably would expect to move down to probably 400, over the next few months. And same with the small caps. It flagged out here, it's been breaking down, and now it's just going to be more likely to continue to push down through support as it enters this new breakdown stage. And if it down through 188, it's probably going to come back into this like 160 area. And the same with the SPY again. We know the clear downtrend that we've been in. It's much easier to not really fight this trend and just let it run its course until it does start to base. But for now, we've been pretty clearly in this downtrend. And for pretty much all 2021, the major psychological area of support was at 400 level in the SPY. And now we're more than likely, I would say, going to test it before we do start to base out. Getting to some of the very weak sectors, we have consumer staples that are, bearish engulfing on the week, took out the prior pivot low. And really now the next kind of line with sand is like this 177, 175 area. Consumer discretionaries, along with technology, both were the strongest sectors in 2020, 2021. And not surprising now, they're some of the weakest because they ramped the most and now they're coming down the most. So we have this major pivot here at 270. More likely we'll just kind of push through that and probably get closer to this 200-day. Same with the with biotech, just Hing over, spare flagging and breaking down, and still in that breakdown stage. Same with telecom. We can see it clear as day. This breakdown continues. And same with tech. Tech and discretionary is very similar chart. Both were the strongest names of those prior 2 years. And now they're both, pretty much the weakest. So not really much out there from a broad market standpoint of what we want to really be putting risk on. It's really kind of de-risking and raising cash if you can. And the two top ideas I'm keeping an eye on is this HUBG up through 87. Again, I'm not in it, so this 82 stop really isn't significant because I'm not in the name yet. But for now, it's pretty much in this 85 to 72 range. And when it gets back up through 87 is when I'll want to be involved. And this CIVI, a name that Django called out, again, in the energy space, but it hasn't really gotten crazy extended, still just in this bigger flag. So if and when this name wants to break out up through 59/60, that's when I want to be involved. A few of the stocks that Shake went over in the shakedown, we have this DDS, very tight. And this is exactly what we're talking about when we want to look for the base. So we can see clear as day this breakdown. And then we can see the base that formed for many months. And this is what we want to really see out of the broad market, as well as that breakdown stage ends. We want to see a clear base, so we have like a defined out. So this DDS looks great up through this 275, 280 area, very tight base versus like 265. This is definitely looks really good. SIGI, another way of looking at it, up to this 85. Nice little flag that's forming. This NTCT. Up through, I believe he's looking through up to 32. And let's see, Hewlett Packard up to this 37. And then last but not least was this Lowe's 62, 63 area. A couple nice, given that the market's pretty bleak out there, there is still a few decent setups that are out there. So those are kind of the main ideas we want to run through. And if there's any ideas you guys want to go over, now would be the time.
Yeah, I got a nice list from Kusha. The main theme is definitely kind of sitting and waiting, but these are some setups that he's kind of keeping an eye on as they develop over the next few weeks. First one he's looking at is UNH 500 area.
Okay, this looks great. And again, for healthcare being pretty weak, this name could not look better. Some relative strength is definitely one to keep on the radar. Looks really good.
Yeah, absolutely. Third attempt at all-time highs pretty much. So definitely one to watch as it develops into that 500 level. Still a little wide, obviously, because you'd have to give it down to 470, 465-ish, 470. So it's still a little wide, but it definitely want to keep an eye on. Next one, he's got a EVH through 30. Needs a little bit of consolidation. I think he was looking at, this is the one that he was looking at last week through 28, and it kind of gapped up and didn't give a good entry. Starting to kind of flag out again at this kind of more significant level. So it actually is starting to look even better than that 28 level. Just needs some consolidation, like you mentioned.
Yeah, definitely. I agree with that.
Yeah. Next one is Solar Edge, SEDG, through this 336 level, 336, 340 area. Again, one he's sort of just waiting to digest this big move that I made off of that 220 level, because it's up $120 in just a couple days, so definitely waiting for this flag to develop and then buy through that resistance area.
Yeah, definitely makes sense.
He actually had DVS 280, so it looks like he's learning something if he's putting up Shakedown Trade of the Week as one of his names, which is always good to see. That always feels nice. So yeah, DDS to 280 again. The next one we got Costco 540 area. He said needs a lot of development still because it's pretty choppy, but watching, he's definitely keeping a good eye on stuff that has relative strength, and that's kind of the key right now. When the market's kind of all over the place, you want to look for these stocks that are holding up well. Yeah, higher lows, exactly what you want to see. Just got to see it tighten up a little bit, and then it can make it for a good opportunity.
Definitely with you on that one as well.
Next one, we got RS 192. Flag at highs. Some really tight action these last 2 days, which is good to see.
Yeah, probably like a little momentum breakout.
Yep. Using that previous resistance as support, really nice little pivot there from last week at that 180 level. Next one is CNXC, which is a recent IPO. He said this was probably the only thing that he would maybe start a position in.
CNXC?
Yeah. Yeah, it's from 2021, so it's about a year old. But yeah, nice flag at highs again. These newer IPOs have less. They rely a little bit less on the overall market, so you'll tend to see some relative strength on those if they're moving properly. I think it could use a little bit more time, but it looks like he's kind of looking to sneak in through this 198 level. I would say probably best to wait for that 210, 209 level.
Yeah.
And just wait for that tight consolidation, because right now the real support is all the way down at the bottom of that pivot from a few days ago, which makes the trade a little bit wide.
The name's just it just seems like it just has these periods where it just consolidates and just does kind of nothing. And this seems like one of those periods where it's nothing out of the ordinary for this name that there's a reason to really want to sneak in. It just seems like it's kind of just doing what it has.
Yeah. And we got two from Mike this morning. He's looking at CIVI, which we've been talking about in the chat a couple times through this 59 level. So still watching that. Obviously, sellers are still alive on this one. It got rejected pretty hard, but it never really broke resistance. So this is one of those great lessons where like you don't want to cheat the level. You know, if you bought this one early Friday morning thinking it's going to rip, you end up, holding a loser right away versus just waiting for that actual resistance level to break, have a buy stop over the resistance level, and let the stock work from there. So it looks like it's gapping down a little bit today, so we'll see if it can hold up or not.
Yeah, this almost seems like we like kind of have to get near support. Like as perfect as this 59.60 area looks, I feel like to actually get this perfectly is going to be a little bit harder than we think. That if this does come into 50, 48, and doesn't come down to 44, like we don't want to really see it come back down here, because if that's the case, it's probably going to go lower. But if it can pull in, hold up on the 48 and turn back up, and we can like kind of sneak in up off the support, it'll probably be much easier for us to be involved. And maybe after 60, then just buy us up in at 59 if it just randomly wants to go. But I think that's going to be a much harder trade overall, even though no matter how good this chart looks. I think we just need to really get something.
I agree. Yeah, I agree. I mean, even maybe sneaking in, like if it can hold that big reversal candle that it made around that 52, if it could like hold that low and then sort of find some support there, and then we could look to buy on the way up, maybe through like 53, 54 with a stop under 52. Now we're risking $2 on it versus trying to risk $4 or $5 on a $50 name. So yeah, just one to keep an eye on, I think. The next one Mike's looking at is Boot 92. Looks like a sneaky buyback type of setup.
Yeah, I mean, it's good to see, like, clearly this, the name had broken down. And that's what we see, like, when these like stages kind of overlap, or like this was when the name was breaking down. And then it has since started to kind of base out, and you can kind of see it's overlapping. So it's good to see this. We can see the 200-day has been acting as resistance. So maybe this base maybe takes a little bit longer to really form, but this is, kind of in this spot, it had this little first attempt. These are kind of the second attempt. So definitely the spot you want to look to buy up through, which is mainly the base out longer, just like what was Shake's one? Yeah, so like this is, wherever the name you just mentioned, Boot, it's probably like the equivalent area of the base of like right here. Like it started to still, it looks good, but it still might need more time to truly develop when it's going to really want to go. And that's just something that, when we talk about when it needs time, that this is kind of what we're talking about. Like it just needs more time.
Yeah, I agree. Yeah, the 200 MA is just acting as resistance. So once we can start to see that start acting as a support, I think that's when it'll start kind of trending upwards. Then we got one from Corbin right here. He's looking at plan through 49. That earnings gap up in a sell-off is kind of telling me to stay away from this one, honestly. Seems like the 200 MA is acting as heavy resistance still. So like I would just wait. And like, like you always say, usually when a stock gaps down on earnings, you kind of want to stay away from it until it starts to show some real strength. And that gap down from November, and it just kind of didn't do anything, just went sideways.
Yeah.
So, I mean, we'll see. For now, I think this might head lower, but.
Yeah. So this is, it's like tricky because it's like, it's still a nice bit. Like it's good to see, like it's still, like we're talking about these bit, like it seems like today's just been talking about bases where it's like still a solid base. Of course that like this gap up and then like it reverses on this earnings, and probably not the best sign, but it also didn't get smoked on it. Probably also a good sign. So I can kind of see definitely what he's looking at here. Well, if we're talking about like of these bases, it's like we have this one under the 200-day, we had Boot, little premature, also under the 200-day, and then like DDS sitting above the 200-day, and more attempts. So it's like of those three, this DDS is probably the best one because it's above the 200-day. Earnings are out of the way. Didn't really have any gap down on earnings except for, I guess, here. So like, of these bases, this one seems to be the best, but the other ones, even that last one, is it plan? Yeah, not that bad, but probably like not worth to risk 10%. This is the real risk. You know, if you're buying 50 versus 40, I don't know if I want to be giving this $10, and to give it 5 still seems like a lot, because then you need to get 25 bucks out of it, and that's selling it up here, which may be a bit aggressive. But again, still, you know, great base.
Yeah. Jace just said that Kim is looking decent. No game plan, though. Just said looks decent. Ben, can you mute this K guy?
Yeah. Let's see.
But yeah, I mean, Kim, nice wedge forming there. Can't hate on it too much. Looks like it's kind of using that previous resistance as support now. If you look at like if you zoom out and look at like 22, big resistance level that it's holding up, which is always a good sign.
Yeah.
And it's got room to go back up to this 32 all-time highs area. So it's been there before, which is what I always like to see, is the stock's been there before. It can kind of get there again.
Yeah. Maybe giving this thing a buck, I think it, you know, could make sense. You're buying up to 24.5 versus 23, so $1.50. Yeah, I see what he's looking at.
Yeah. George is looking at, if energy continues to be strong, he likes WEC through 99.
Well, so this is a utility name.
Yeah.
So it's not going to really be too cool.
Yeah, you're not going to get like a monster breakout.
Guys, you know, this 100 or 99, I would just say 100, just keep it simple. Definitely looks great. This is, you know, it's been setting up for 2 years now. We can see for pretty much the last almost full year, it hasn't been able to get above 100, which is, you know, it's clearly a very defined level. If you were me, I would just buy 100. I wouldn't try to sneak in for the dollar. Probably, you know, you're going to get at least like a 10% move to that retest to 110. But again, it's a utility name, so very low beta. You could even see on Friday, you know, move 0.3%. So we talk about, you know, market was down 1%, and this thing was down 1/3%. That's just kind of going, we're talking about the beta of this name, you know, utility, very low risk relative to like a technology name that you're not going to get like a crazy 3, 4, 5% day of this name unless something like wild happens. So just, but it still looks good.
Yeah, I mean, the other thing to kind of keep in mind is like, yes, the energy sector has been doing really, really well, and it's been ripping, and it's kind of overextended. So to me, that tells me like if this stock hasn't moved during that time, that's probably not something I really want to get into, because it seems like it's not really one of the leaders of the sector, because it's not like you look at some of the other utilities and stuff. Well, actually, and yeah, I mean, it's just
this is like an overlay of the utility sector, which
okay. It looks pretty similar then. It's like
yeah,
matching it, but I don't know if it'll really like break out of that 100 level, but
yeah,
we'll see in time. I'm not personally looking at too much. I am keeping an eye on this crowd. Just tech wise, it's relatively pretty strong, just kind of forming a base here. It still needs a lot of work. I'm not looking to buy this week or anytime soon, but the fact that it's holding up, had pretty good earnings, like a good earnings reaction. It's sitting back above most of its moving averages, still below the 200 though. That's why I'm not eager to get into this at all. But definitely watching this kind of setup, I think crowd can be a really good long-term winner in the future.
let's see.
And I think that's it. That's all we got on the list right now. And we'll be back at noon for some Q&As.
Got a busy day today.
Yes, sir.
All right, guys. Well, any ideas, post them in the chat. Any questions, you always reach out, and we're here to help. You guys have a good trading day.
Later.